CNBC-TV18.
Hello and welcome to Commodity Champions. I am Manisha Gupta. The start of the Russia-Ukraine conflict disrupted the price of food staples, sending them rocketing to multi-month highs. The recent aggravation of the conflict has only made matters worse, with experts fearing that Russia could seize trade at the Black Sea port. These fears in the midst of the drought that's gripped Europe has hurt supply of staples as demand continues to grow world over. Prices of staples like wheat are currently at 14-week highs, while corn prices are trading at 3-month highs. The edible oil space has also seen a spike in prices as demand from China and Malaysian exports rises. Supply is equally strained back home, with excess rains in the month of October hitting India's crop yield. So how much further will the prices of staple foods rise, and can the government do anything to stem this spike? Also, how is the festival season looking like? To discuss that and more, I'm now joined by Dorab Mistry, he's director at Kothari International. Mr. Mistry, hi. The Indian government put out a table where we see various commodity prices declining between 2 to 8% for the month of September. How have you seen the last month when you see the food inflation, and is October a bit of a concern right now?
I think the Indian government report is absolutely right. Commodity prices have peaked, and they have peaked over the last 2-3 months, not necessarily only in the last 1 month. But everything has been thrown into haywire, or the waters have been muddied by this latest cut in OPEC's production profile. This is a mischievous cut. I call it OPEC's badmashi, because they had no reason to tighten the screws on the world economy and to drive the developing world into recession by this cut and by trying to push up prices. This is a political cut meant to throw mud at the Democrats in the upcoming midterm elections in USA. And it's a very unholy alliance between two very unlikely bedfellows, Saudi Arabia and the Russians. Now we have to watch and see whether this cut leads to higher prices. It has led to some higher prices. Crude oil has gone up by almost 10% in the last 1 week. So I would say that the Indian government's prognosis on inflation is quite correct. Worldwide, commodity prices are coming down. Of course, the dollar has become stronger, but the dollar will peak at some stage in the very near future. So the outlook for prices is very good for consumers. It is very good for the economy. But these little missiles that keep throwing into the world economy by despots and all sorts of dictators sometimes muddy the waters for a short period of time.
Well, that point is well taken, but you mentioned about the dollar, and the rupee has been hitting record lows much part of this week. Is there a pinpoint, is that a pain point rather, or do you think it won't last for too long?
Not for too long. And remember that when the rupee weakens, our exports receive a very good boost. But the boost and the reaction of greater exports is always delayed. It takes 3 to 6 months for exports to pick up. Whereas the impact of the weak rupee on inflation is almost immediate, because you have to pay for your imports immediately. So I am not too bothered, frankly. I have been saying it for the last several months that I don't lose sleep over the slight weakening of the rupee. It is actually good for growth and good for India's exports. But we will see the effect of that in 3 to 6 months' time.
Okay, let's talk about the palm prices then. And you've been kind of bearish in them, and we've seen prices come off its highs as well. What's your sense now? How do you look at the rest of this week when you look at palm prices?
Well, you know, Manisha, I've been bearish on palm prices since the month of June, if you take the latest. And as long back as March prices were at a peak of 7,500 ringgits. And I made a forecast that they would be down to 4,000 by September, or rather by June, and then 3,000 by September. And we almost got to 3,000 by the end of September. So I am bearish. You cannot have rising commodity prices when the economic macros in the world are looking so grim, and we are on the threshold of recession. in most of the developed world. In fact, some of the developed countries like the United States are already in recession. Parts of Europe are already in recession. So you cannot keep pushing up commodity prices, and which is why I think that this cut in production by OPEC is a political harebrained idea, which I hope will bomb and will not succeed. So I remain fairly sanguine on commodity prices on the downside. I think they will keep gradually deteriorating. And on palm oil in particular, I am on record as having said that prices will go to 3,000 by the end of September and 2,500 ringgits by the end of December. And I see no reason to change my forecast just because OPEC has cut its production slightly and given a spike to crude oil prices. As you know, crude oil and palm oil now more or less work in tandem because of the pivot of biodiesel. And there are reports that there could be better biodiesel demand, etc. But I don't see any reason to change my forecast. The one point where I have been slightly wrong has been my estimate of India's imports. I think India has found palm oil cheap relative to other oils, and our imports have surprised me on the upside. My feeling is that Indian stocks by the end of October are going to be at a record level, stocks of palm oil. And Indian importers have gone overboard. Many of them are now sitting on huge losses because they bought at high prices. But processing margins are good, offtake is good. Basically, the Indian economy is doing quite well. And as a result of that, India's imports have surprised me on the upside.
All right. But I get your point when you say that the palm oil prices from here on will continue to decline. And that's good for the festivities because there's a lot of buying that will happen. So while the consumer side is sorted, would you say that the farmers may have something to fret about given the fact that you will see arrivals coming in very soon?
You are absolutely right. Good question. Generally, it is a fine balance that the government has to maintain between low or reasonable prices for urban consumers and remunerative prices for farmers and rural India. So I think the government now needs to monitor prices very accurately, very actively, because there is a danger that prices will fall too far. And while the MSP on soybeans or on grains may not be threatened, the farmers will not actually make money the way they made money last year. And if farmers do not make money, they will not plant more oilseeds next year. And India's agricultural productivity is so low, our production in many areas, particularly oilseeds, is not keeping pace. We need to pay our farmers better. So I think the government has to do two things. It should be ready with legislation or notifications to put up small amounts of import duty. This blanket declaration that there will be no change in import duty up to 31st March is like writing a blank check for the exporters of palm oil in Indonesia and Malaysia. Indian government should not have done that. They should always keep their cards close to their chest and reserve the right to protect the Indian farmer if required. And the second thing that India needs to do is to ensure that the MSPs are properly implemented and give farmers and merchants a hedging instrument. That means reopen the futures markets. Futures markets, there is no reason. There was good reason at one time to shut them down, but there is no reason anymore to keep them shut down. Let's open them up. Let's create business. Let's give hedging instruments to our rural economy and ensure that we do, or our farmers, our merchants have the same instruments available as their counterparts in other parts of the world.
Well, yes, absolutely. After the festival season is over, the government perhaps may have to take a note yet again on the current policies. But I take your point that the edible oil prices are not rising, and this is clearly a time for consumers with the festivities on. Mr. Mistry, thank you so much as always for joining us. It's time for a break now, but when we return, we shift focus to rising prices of pulses and India's sugar sector in a chat with Mr. Bimal Kothari of India Pulses Association and Mr. Prafful Vithlani of the All India Sugar Trade Association. Welcome back, and you're watching Commodity Champions. We now shift the spotlight to an Indian staple, which is pulses, which have seen the prices spike as erratic rainfall has led to lesser area being sown. The farmers have shifted to more competitive crops, has only constrained produce further. So are there any solutions available to the government? Mr. Bimal Kothari, Vice Chairman of the India Pulses and Grain Association, now joins us on the show. Mr. Kothari, the last 3 months actually have seen the pulses prices gain up quite strongly. When I look at tur, urad or moong, we've seen prices gain anywhere between 18 to 25% in last 3 months. How do you look at that?
Thank you, Manisha. First of all, in fact, I do not agree to your statistics, what you have just mentioned.
Okay.
In fact, if you look at the prices in August, I'll go pulse by each crop. Each crop was like the kharif crops, tur, urad and moong. So if you take, say, for example, tur. So if you take the tur, the prices in July, August were much higher than what the prices are now.
Okay.
In fact, the price of tur in September has come down almost by 8 to 10 rupees a kilo, and which has again improved by another 4 or 5 rupees a kilo. So I don't think the price of tur has gone up by 25%. And we, in our previous conversation, I have already mentioned that once the crop from Africa starts and we get the arrivals, then the prices will stabilize, prices will start coming down. And we have seen the result. Prices came down by almost 10 rupees a kilo, which is a little bit improved by 4 or 5 rupees, but still they are selling much below the minimum support price. If you look at the imported tur. And let me tell you, in the last 1.5 months, we have seen almost 150,000 of tur being imported at the various ports of India. And we are still, this import is still continuing. So I don't think there is any reason to worry about or concern about the prices of tur, because though we have the festival season is going on, but I see the price will remain stabilized and there is nothing to worry about. Of course, as far as going for the tur crop, new crop is concerned, definitely concerned. As per the government's fourth advanced estimate, the last what we have received is 43.2 lakh tons. And now the first advanced estimate, which has been released on 21st September as it is, the government's estimate is 38.9 lakh tons. Right. So which is almost 5 lakh tons down since the last year, since the fourth advanced estimate. So definitely there is going to be a concern for the new crop. But for the present, I don't think there is any issue. The prices will remain stabilized, prices will remain very competitive during the festival season. For the next season, definitely, for the next year, definitely there might be some issues, some concern, but we will see the crop from Myanmar coming in the month of January, February. So I really don't think the prices are going to go up quite significantly. They will remain at a certain level, and I think consumers are not required to worry.
All right. Mr. Kothari, I also wanted to know about the October rain impact. Do you see the pulses as a sector really looking at it with a concern to that?
Yes, definitely. Definitely, this October rain, last 2 weeks rain has definitely affected I am sure that particularly the particularly the urad and moong, they are going to get affected. But it's very difficult to assess the loss at the moment, because some damage is definitely going to cause to the crops. The quality may get hampered, and I think there will be more damage percentage in urad and moong crop. But tur, I don't think there will be any issue. But anyway, tur production, tur sowing is less this year. So there will be concern of the tur production for the next year. As far as urad and moong is concerned, they are also down by some percentage. But you see, urad, we will have we are importing. Government has has announced a free policy till 31st March to import urad and tur from various countries. So we are also getting the urad from Myanmar, and I think presently in Myanmar about 2.5 lakh tons of the stock is still lying there, and new crop will hit in the month of January. And in India also we will see a fairly good crop. We may see a fairly good crop of urad in the month of February, the Rabi crop. So I don't think, I'm really not concerned about the very high price.
I get your point. So you're not worried about the prices right now. But tell me one thing,
Yes.
how are you looking? You know, the major demand for festivals will perhaps come in for chana. Besan is what gets consumed the most. And we do understand the kind of stocks that the government has. And it's a new next crop, really. How are you looking at the demand and availability there?
Chana, as you know, already we had a record crop this year, 13.7 million tons as per the government statistics. And of course, which we can also see that despite government's procurement of 2.6 lakh tons chana, the chana is still selling below minimum support price. So chana availability is absolutely no issue. And since we have very good crops, I'm sure the farmers are going to grow chana once again. And we are going to see a fairly good crop. So chana supply as well as the prices, definitely there is no concern. The government should not be worried about this at all, and the consumer should be getting chana and the besan at a very fairly reasonable prices.
So like edible oil, pulses as a sector also has no major concerns as far as availability and affordability is concerned. Mr. Kothari, as always, thank you so much for joining us and giving us a sense on what really is happening in the pulses sector. But moving gears, and let's get some sweet into our palate then. And India has emerged as the world's largest producer and consumer of sugar, with more than 5,000 lakh tons of cane being produced in the country for the year 2022. The country has also become the world's second largest exporter, following the breaking record season that we have seen. The high crude oil prices, along with increased demand from biofuel producers, has also helped prices recover this week from a 14-month lows. So what lies in store for this sector? Prafful Vithlani is with us on the show. Mr. Vithlani, hi. First of all, on to the October rain factor itself. Has the cane crop at any point being damaged, or do you think it's a good time?
No, it's a good time. First of all, let me clarify that today I am with you as chairman of group of companies of Jagjeevan Kesoji and Company.
Sure.
See, actually, the production of sugar can be impacted only in case of sugar can get lodging or submerged.
Okay.
How the lodging get place? Lodging can get place if there is a flooding with storm winds. Currently, it is just flooding in few part of central UP. Except that I have not heard anything more than that.
All right. Okay.
Okay. Now, as far as currently the height of the sugarcane when the season is about to start is so high that there is no question. It's ruled out of any submerge. So there is no lodging, there is no submerge. So there is no question of any sugar production to get down. Okay. And the crop needs 15 days to get matured after rain is stopped or over. The season 22-23 is likely to be delayed by 15 days than expected. Okay, because once the rain is over, the 15 days of time is required to get the sugarcane mature. The government of Maharashtra earlier has put a very strict restrictions to the Maharashtra sugar mills not to start mills before 16th of October. In case if found, there will be a criminal cases against them. That is to get more recovery and more yield. So delay in season always give more yield and recovery. Now here is another 15-20 days delay. That will give more yield and more recovery.
Okay.
There will be another one point that Khansari units diversion will be get affected and sugar mills will get more sugarcane.
All right. So as of now, until now, all of this looks quite positive. The other part of the story when it comes to sugar is what is your sense on the festival demand this time around? And the second part of the question is on what kind of export quota are we expecting and when are we expecting that? Because the industry clearly looking for that notification.
Okay. Let me tell you, first of all, the consumption part.
Okay.
The consumption is robust. See, we are having Diwali in India after 2 years. And particularly, we can say in rural area, the demand is robust. As far as Diwali is concerned, this is going to be the bumper consumption. So there is no, this will, till 15th of November. And once the Diwali is over in say October, but after that, immediately there will be demand for Gujarat and Himachal Pradesh election. Once that is over from December to February, there is a huge marriage season. So the continuous sugar demand will be there and robust demand will be there. Now your another one questions regarding export. Yes, see currently the research house, what they are giving the number on lowest side is 34.5 and higher side is 36.5, somewhere around that. Based on to that, the currently government notification is valid till 31st October only. If they put any new notification for the quota before 31st, it's good. If not, then it becomes OGL automatically. But we expect within next 10 days, the export quota as well as ethanol price rise. Ethanol price rise, don't surprise even it comes tomorrow, day after tomorrow. So export quota quantity, what we believe is somewhere between 5 to 7. And maybe 6 could be there. And there are almost all association except ISMA who asked for the OGL. Now, keeping finger crossed when this will come, you and me, we are discussing from 2 months. Our request to the government is only please declare whatever it may be within a day or two.
Absolutely. Yes, once the number is out, at least the industry is having a sigh of relief there. Mr. Vithlani, thank you so much for joining us. So that is the view coming in for sugar as a sector as well. There is availability and perhaps India could be looking at a record consumption this time around as well. So all the commodities that we've discussed today have seen good availability coming into the markets. Government measures have been on the stronger side as well. And the festivities perhaps are going to be on a higher note as well. But with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.